Ladies and gentlemen, good day and welcome to the Ramkrishna Forgings Limited Q3FY20 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rushad Kapadia from ICICI Securities Limited. Thank you, and over to you, sir.
Thank you, Faizan. Good afternoon, everybody, and welcome to the Q3 FY20 results conference call for Ramkrishna Forgings Limited. We have with us from the management Mr. Naresh Jalan, Managing Director, Mr. Chaitanya Jalan, Executive Director, Mr. Lalit Khaitan, Chief Financial Officer, and Mr. Rajesh Mundra, Company Secretary and Senior GM Finance. I would now like to hand over the call to Mr. Lalit Khaitan. Thank you, and over to you, sir.
Thank you, Rusad, and good afternoon to everyone. We welcome you to the con call hosted by our company for quarter and 9-month ended 31st December 2019. Just update on the numbers. The total operational revenues for this quarter has been rupees 252.25 crore as compared to rupees 491.47 crore in the corresponding quarter. The total operational revenues for the 9-month and ended has been rupees 892.16 crore as compared to rupees 1363.42 crore in the corresponding period. The company has achieved an EBITDA net of other income of rupees 47.51 crore for this quarter against rupees 105.82 crore for the corresponding quarter. The EBITDA net of other income for 9 months has been rupees 166.96 crore as against 290.18 crore in the corresponding period. The EBITDA margin for this quarter net of other income stood at 18.83% in this quarter as compared to 18.14% in the sequential quarter. We have achieved a total tonnage of 18,730 tons in this quarter as compared to 18,517 tons in the sequential quarter. We have achieved a domestic tonnage of 11,532 tons for this quarter against 11,498 tons in the sequential quarter. We have achieved an export tonnage of 7,190 tons including VMI dispatches for this quarter as against 7,019 tons in the sequential quarter. The export sale for this quarter has been 107.42 crores, and apart from this we have dispatched about 14.97 crore of exports material under VMI in this quarter as compared to 115.55 crores total sales in the sequential quarter. The company has achieved an increase in export realization by around 3.6% on a sequential basis. The company has uploaded an investor presentation providing requisite details. We request the investors not to raise any customer specific queries during the con call. Thank you. So, sir.
Should we start the question and answer session?
Yeah.
Yes. Yeah, we can start.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Good morning, sir. My first question is related with the domestic market. From last 2 quarters, you are outperforming your peers in a CV segment revenue. So, are you gaining market share through introduction of new products, or is it because of the change in the client mix? Please throw some light on it. And what is the outlook for the domestic CV industry given the scrappage policy may be announced soon?
To answer your question first, the first question, basically we have gained some market share, but we have increased our rupee spend per vehicle, and this has given us more tonnage in terms of supplies to the commercial vehicle market. And in terms of how the domestic market looks like post the scrappage policy, I think it's a very hypothetical question. We are hearing for scrappage policy, I think probably since now 8 months. So once the scrappage policy comes through, I think then only we will be able to have some answer to it. But we feel that the bottom is in place, and from here on, I think only market is going to go up. And how fast the market is going to go up, it all depends on how the infrastructure and other spend improves in the market.
Okay, sir. My next question is related with the export. There was a sharp fall in the export during this quarter. As you mentioned in the last quarter, there's 350 ton was good in transit, which was to be reflected in this quarter. So can you give some sense, basically what happened and what is the outlook for the next year in FY21?
In exports, I think there is no fall. If you see quarter on quarter, I think exports have grown in, if you include the VMI number, we have done close to 120 crores plus exports vis-a-vis what we did in the previous quarter. And I think close to around 950 tons, which values close to around 15 crores, are right now the current quarter VMI exports which have been done.
So VMI
going
means
forward also we feel that the export market is going to continue to be robust for us with new geographies and new markets we are entering. I think going forward also we believe that export is going to be always in next coming quarters also, and FY21 also exports are going to remain robust for us.
So VMI means, sir?
Vendor managed inventory. Basically it is the warehouse which we have created in European market, and wherein we are shipping the material, and from there on GIT basis we are supplying to the OEMs.
Okay. So these tonnage are seems goods in transit or something what?
It's the goods in transit.
Okay. So how much it is?
It's worth 15 crores, close to 950 tons.
950 tons. So what is your revenue target for FY20 for export? Revenue or volume target, sir?
I think already 9 months are over, and I think in this quarter also we should be doing what we have done in quarter 3.
Okay, sir. And sir, what was the contribution in export, especially from the North America versus Europe?
We don't actually, in totality, I think contribution, Lilith has already spoken in the starting. What is the realization per ton? Basically, we don't calculate separately in terms of what is there in Europe and what is there in US.
Okay, sir. Sir, my next question is related with the you are also entering into the LV segment in the North America. So how much incremental revenue from this segment in FY20? And as you have already received an order of around $8 million per annum, so what revenue we can target? You are targeting in FY21 as well.
FY21 we target to achieve the full quantum of order which we have received. This year we should be ending up close to around near about $1 million only. But next year we will be achieving the full volume whatever order we have received.
And in a passenger vehicle segment, what revenue are targeting in FY21?
No, passenger vehicle we are not there in North American market. We are in only LV and MHCV.
Okay, so in a passenger vehicle you are only into the European market and just
no, we are not there in passenger vehicle market anywhere.
So as you mentioned earlier that you are targeting to enter into this European and the other export market into the PVs as well from the second quarter of FY21.
No, basically, like we have said in our earlier call, we have deferred. Earlier that was basically with the capex which we were doing. And the capex now we have put in a slow cycle. While we are continuing to do the capex has been put into a little bit slower trajectory, looking into how the market shapes up. So I think probably this should be 6 months delayed to getting into passenger vehicle market.
Okay. Sir, what is the current status of acquisition of the Amtek Auto's asset? Can you throw some light on the purchase consideration and asset turnover from this business?
Okay. Amtek Auto right now is pending with the pending approval of NCLT. This is before NCLT for approval, and the hearing is going on. We expect this approval should come within a 1 month time. Though we have expected a little earlier, but court process takes time, so we can't anticipate exact timing of that. But we expect another 1 month we will get the approval.
So, what is the acquisition cost of this business?
We have to pay a total of 85 crore upfront for this business.
Okay.
And and there is a deferred consideration also for 24.5 crore.
25. So total would be around 110 crores, right?
109.5. That has to be paid over a period of 5 years. It's 5 crore per annum.
Okay. And what is the peak revenue from this business?
See, that again I should work out, but we expect a good amount of revenue. And this business earlier, when the Amtek group was working, they have done a big revenue about 350 crore from that at 5 year back prices. So from the current whatever we can achieve very easily at the peak 700-800 crore from this business when the operations optimize.
Okay, sir. And sir, my last question is related with the gross margin, which has improved significantly in this quarter as well. So, what is the reason? Is it because of the fall in the RM cost only, or because of the cost cutting and change in the product mix?
It is both equally contributors, basically raw material price as well as the cost savings what we have started since last 6 months time. If you see the previous quarter also, there is significant improvement in gross margins, and I think this is going to continue going forward also.
Okay, sir. Thanks, sir. That's all from my side.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Vijay Sarthi from Anand Rathi Financial Services Limited. Please go ahead.
Thanks for the opportunity, sir. Just want to check back on exports. So mid of FY19, we were highlighting a lot about customer acquisitions in Europe, adding of components in US and all that. But we seem to still not even reach the FY19 numbers. In that light, how do we expect FY21 to be in exports in terms of tonnage? Do we really see materialization of some of these customer acquisition in Europe and addition of components in US to materialize?
Already components addition in US market from this quarter onwards, it's already in place, and I think first quarter of next year will be one of the much needed improvements in terms of tonnage, in terms of exports. In terms of Europe, we had already very clearly said in the mid call in 2019 that the customer acquisition and converting them into top line is going to be at least 9 to 12 months away, because at this stage we are only giving samples and field trials and testings and other things are going on. So obviously we can see some significant revenue coming in from these customers only in the second quarter of FY21.
So should I assume that the 700 tonnage, 700, the run rate of exports, say from 110, 112 crores, should move back to 120, 130 crore level by first quarter FY21?
This quarter also, if you see, it is already 120 crores per quarter.
Yeah, so I'm saying so.
Plus 15 crores of VMI.
So do we go back to 150 crore level, what we did in FY19 mid?
I think obviously by FY21 third quarter onwards, you will be able to see 150 crores of top line coming in from railways.
And this should primarily be from European customers and the new components.
Yes. Addition of top line is going to be from new customers in Europe and the addition of components in the US market.
Okay. The other thing is that the the risk of when this, so we did the domestic tonnage, we did close to a lakh and odd in FY19, and we will probably be half of that or little over that this year. Now, do you have a sense of when do you think that you will reach to this 1 lakh? What are you guys thinking? What are you planning?
I think
What is your budget?
we are keeping our fingers crossed. Budget, we are still on the process of finalizing our AVP, I think in next fortnight, and we can only come up with the AVP numbers only after our board approvals are over. But as of now, we are just keeping our fingers crossed, and basically whatever we discuss from OEMs, we believe that the worst is behind us, and going forward after this transition of BS4 to BS6, probably which we are only 30 days away, we would see green shoots coming back into CVs. Market may not go straight away to the top what we saw in 2018 probably, but yes, there will be significant improvement from where we are. And if at all we see the green light of the scrappage policy, so presumably I think next 4 to 5 years we should see one of the best markets in India for the entire auto industry.
So adding to this point, sir. So if one were to look at, for reason that this 1 lakh tonnage would take another, say, 2 years to come by, what do you think you will have to do in the company to ensure that you maintain profitability or you maintain profits? What is it you will have to do?
At the current, if you see at the current juncture where we, I think, are doing less than even 50% of the utilization,
Correct.
company is making profits. May not be significant, but yes, it's remaining in green, and it is being able to service this debt and other commitments well within time.
But you will also have overheads going by, right?
No, I think overheads, if you see, overheads have not declined, or overheads, whatever cost controls we have done, they are basically in terms of processes, not in terms of cutting down on overheads.
Okay.
So whatever cost, it is not that tomorrow when the market is going to go up and these overheads are going to come back in increase in going forward also, whatever process improvements or cost cuttings we have done, going forward when the market again comes back, as you say, next 2 years, probably company is going to be in a better operating margins at that period of time.
So finally, in FY21, is it fair for me to look at exports tonnage of at least FY19 number, or do you think no, the situation is very bad?
Can you repeat the question, please?
So in FY21, should I look at exports tonnage close to 33,000, which is the FY19 number, or things are looking even bad?
No, in exports, I think, like I said into my to your earlier question and to earlier investor question, we are looking at FY21 to be one of the good years in terms of exports.
Okay. Okay. Thanks, sir. Thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Mitul Shah from Reliance Securities. Please go ahead.
Good afternoon, sir. Thank you for taking my question. So my first question is on your average realization for export, which has improved from almost 164,000 to 170.5 sequentially. So how much contribution is from the currency benefit, and how much is there any price increase or any value addition? Can you give some detail on this?
I think Lalit will be able to answer in terms of
currency. Currency is very nominal this quarter. We have a total, I am not calculated on the tonnage or per ton basis, but it's about 1 crore total gain, 97 lakh to be precise. We have gain on the currency side. Rest is from the price, product mix and price.
And in terms of major increase in the product side, or are we adding any value addition to the product going forward?
Yes, we have in this quarter to our existing customers itself, we have started supplying some components in much higher value add condition. So there has been an increase in the realization per ton.
Sir, can you give ballpark details in terms of last 1 year client addition or geography addition and product additions? And even for next maybe 1 or 2 quarter point of view, wherever you have visibility, what kind of products you can add to the existing customers?
I think in terms of geographies, like we have already said, we have added lot of LV components in the North American market, which is basically going to reduce the pressure on the Class 8 trucks for us. Whatever denominator the Class 8 trucks goes down also, but LV market is quite stable, and we feel that we will be able to clock the similar revenue from the Class 8 market, LV market. In terms of Europe, we have already in our previous calls, which happened in quarter 2, we have already explained the 2 new customers we have acquired in Europe, for which the components are in right now testing or in the sampling stage. And these customers are in FY21 second half, these are going to get converted in terms of revenue. In terms of opening of new geographies, yes, we are trying very aggressively to enter the South America market, and probably we will have some good news in coming quarters in terms of our entry into South American market.
And sir, finally on the capex, what would be for this year and for FY21?
I think capex plan remains unchanged. Whatever capex plan we have guided in the previous quarters, we are a little slow in implementing the capex, but gradually as the market, we see the market, we continue to invest in terms of our capacity addition into the new geographies which we are trying to enter, or new ventures which we are trying to enter.
And for next year?
Next year capex plan is not yet freeze in terms of refurbishment and all. I think with the AVP, I think that's going to get freezed. In the next conference call, probably we'll be able to give more numbers to it.
And sir, in this your export revenue from VMI, then it is a vendor management. So our margins will remain same for this, or it will be slightly lower compared to normal export?
Margins will remain same.
Okay, it will not change. It is purely manufacturing margins.
Yes.
And sir, last question is on this acquisition 85 crore we need to pay upfront. So how do you plan to fund it?
See, we will tie up the debt for this, and for 75% of this amount, and 20 crore amount will be increased from RKFL as equity.
Okay. Through internal accruals only.
Yeah. And that will be in the SPV. The debt will be in the SPV, not RKFL. Balance we will try to have the debt in the SPV only.
Okay. Okay, sir. Thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Aditya Makaria from HDFC Bank. Please go ahead.
Yeah, hi. Just on US Class 8, how is the demand currently? Because this year we were expecting 15-20% fall, right?
We are still expecting a 15% fall in this year.
Okay, but there was some improvement in the order inflow, so I was just wondering.
If we look at the backlogs, what we feel that probably being in this year, we expect what we have got feedback from the OEMs over there, we expect a 15% fall in the Class 8 truck market. And accordingly, we have budgeted for our sales.
Okay, and just one question on VMI, that is income which we've already booked, right?
No.
The income which we book, we will book only when we sell to the end customer.
Oh, okay. Got it. Okay, fine. Thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Sagar Parekh from One Up Financial. Please go ahead.
Yeah, sir. Thank you for taking my question. Firstly, just continuing on the previous participant's call. So, if the income is not booked, then why have we included this in the tonnage number?
Because this quarter the dispatches are more than the last quarter. That's why we wanted to show the export tonnage is not gone in compared to last quarter. That's the total point we wanted to present.
Okay, so if I have to adjust that, so I have to adjust that in the export volumes for this quarter, right? The amount which was there in VMI.
If yes, VMI 950 tons, you have to adjust it from the 7,000 tons which we have indicated as export dispatches. Basically, 950 tons have to be reduced.
7198 is the number for Q3, so that I reduce it by
900 tons.
Okay, fair enough. 950, got it. And what is our debt number at as of December?
Around 930 crore.
Okay, so that has gone up a little bit.
About 5-10 crore here and there, I think. Last quarter it was 915 or 920, I think.
Okay. And do you expect that to, so since we are recalibrating our capex based on the demand, do you think this debt is the peak debt number, or you think with this acquisition and the capex debt will go up?
Acquisition debt will be separate.
Okay.
And we are continuously monitoring the debt with our performance, and we will try that the debt will remain currently at this level only.
Okay, sir. That's it from my side. Thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Sir, what is your plan to increase your revenue from the industrial side where the contribution is quite low right now?
No, we have no, basically what do you mean by industrial side actually?
So it's basically in the mining side. Mining and the railway.
No, we are already doing with mining, but railways, yes, we are looking at increasing our revenues from the railways, and I think from a level of 2 crores per month, we have already touched 5 crore rupees per month revenue from railways, and going forward, we expect railway revenue to keep on increasing continuously.
So how much revenue was in last 9 months from the non-auto side?
Yeah.
Hello? How much revenue was from the non-auto side in last 9 months?
We had about 11 crore from the railway.
Okay.
And apart from that only, we have about 8 to 9% revenue from the non-auto side.
Okay, and in oil and gas space?
I don't have a specific number.
Okay. Sir, my next question is related with your subsidiaries. So you just wanted to understand what is the business model of this global forex and tours and travels, because the profitability is also increasing in last 9 months from 34 million to 45 million. And so what is the outlook of this business basically?
On the globe, hello?
Yes. Yes, sir.
Globe forex and travel is continuously, steadily growing, and it's basically in the corporate and corporate ticketing and tour business. And we are just working on that to improve the company and profitability. And we are seeing almost, we are targeting at least 25% decrease year on year in the profitability of this company.
Okay. Thanks, sir. That's all from my side.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Himesh Satra from Sequent Investment. Please go ahead.
Yeah. Hi, sir. So my question is that in the previous call, we said that we are planning to reduce the debt, but on the other hand, our debt has increased. So what are the plans going forward to reduce the debt?
No, I think last call we have never said that we are planning to reduce debt. We had clearly said that we would like to continue with our capex and remain at the current debt levels and ensure that the debt levels do not go up. with the current condition with capex, it's not that we have absolutely stalled the capex. Capex, while the pace of the capex has been slow, we have invested in the capex to complete our railway project. And that's the reason you are seeing about 10 crore rupees increase in the total debt.
Okay, so and what would be the cash position as of now?
See, what you mean by cash position, which means whatever is available in terms of limits?
Yeah, and in bank.
Yeah. We are very comfortable there. I cannot give you the number, but we are very, very comfortable there. You can see that there is no utilization has gone up that way. From the last quarter to this quarter, there has no such change in that limit.
Okay, thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Gunj Bansal from Astro Limited. Please go ahead. Mr. Gunj, your line is in talk mode. Please go ahead with your question. Mr. Gunj, please unmute from your handset if muted. As there is no response from the current participant, I have muted the line. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Rushad Kapadia from ICICI Securities. Please go ahead.
Yeah, hi, thanks. This is Nishant. Hi, sir. Sir, couple of questions. One, there are news reports on the Amtek resolution that is happening with Deccan. So just wanted your thoughts on how do you see possible new entrant in terms of resumption, or let's say, and competitive intensity shaping up due to that. That would be my first question. And the second question is, would you look at tapping into a lower cost debt in foreign geographies to kind of improve your cost structure on the debt side? Yeah.
Nishant, I think first of all, regarding this Amtek resolution, as you know, it's right now the resolution is as an ongoing concern. So Amtek was never out of the market, and it has been sold to Deccan as an ongoing concern. So I don't think it possesses a significant challenge. And going forward, it is going to be extremely difficult for them to reshape the company into entirely in today's world as a modern setup. And it's a time lag, I think, maybe 2 years or 3 years before we see anything coming up from their side. And in terms of tapping low cost debt, yes, we are working on some models, and I think it's too early for us to comment on this, but yes, we are working on tapping low cost foreign debts to bring down our total debt cost significantly from here on.
Okay, sir. So thank you for that, and best of luck.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. Participants, to ask a question, you may press star and 1 now. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you. We appreciate that you have spent your time and have attended a call on behalf of the entire management. Hello? Hello?
Yes, sir, we can hear you.
Yeah, on behalf of the entire management, we would like to thank all the participants who have attended the call. Thank you very much.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.